Good afternoon. Welcome to Daily Currency Update from the Currency Desk. In the morning session today, we witnessed the Indian rupee holding strong against the dollar. This was mainly attributed to the expectations of some monetary stimulus, not only from the government of India, but also from the various governments all around the world. Now, the trend has been similar in all the global economies, that we have had negative data, and on the back of such negative data, there has been a strong expectation of government stimulus or monetary easing that has been building up. Now, due to this expectation building up, we have seen the markets either holding their gains or giving in their initial gains. At the same time, we expect that on these basis, the markets are currently rallying, and if the governments from all around the world do not take up any monetary stimulus or similar measures, we could well witness a sell-off in the markets. On the European front, we have witnessed the euro holding steady near 1.26 levels, and there is expectations of first time a rate cut by ECB below 1%. So if there is a 25 basis point rate cut by the ECB, then the rate would fall to below 1%, that is 0.75%. We have had a negative data from the China front also, that is the Chinese PMI data, which has stooped down to 10-month low. Again, on the Chinese front, we expect the PBOC, that is the People's Republic Bank of China, to come up with some monetary stimulus. On the UK front, we have some negative data, and the growth is showing signs of slowing down. Due to these signals, currently there is expectations of rate cut or quantitative easing from the Bank of England also. Similarly, the US manufacturing ISM PMI data was also not as per expected. It was much lower than expected rather. Hence, there have been speculations of some monetary easing or quantitative easing round 3 from the Federal Reserve as well. A little bit of background check or in-depth analysis on the EU summit measures has been showing that though the ESFS would supply the funds directly to the banks, but this very straightforward system or a measure that has been taken or rather been announced would not materialize. This is mainly because they require a centralized governing body to be built up, and until and unless such an institution is not formed or a regulatory body is not formed, this plan of supplying directly funds to the Spanish banks would not materialize, and the current system would exist. Hence, we can see that the EU summit measure announced was not that much of a change, and over a period of time we would witness the EU summit measure, the effect of the same would disappear. Also, if we see from the longer run perspective, the EU bailout funds are near about the size of 500 billion euros, whereas the total debt or the threat of default from Spain and Italy are near $2 trillion, which is a huge amount. The size is not enough to support these economies. At the same time, if the size is increased further, we could witness some negative impact on the existing economies which are performing well, or the healthy economies like Germany and France. Another point worth noting here is the euro had been tracked by the rupee. That is when we witnessed some fall in the euro, the rupee was seen tracking the euro falls. But at the same time, after the EU summit news or the measures which have been announced, we have witnessed the euro stabilizing around 1.26 levels, whereas the rupee has rallied by nearly 3 rupees. Hence, we expect that fundamentally the downtrend in the dollar is not expected to sustain. The dollar index has again climbed up to 82 plus levels. This also indicates that there is some relative strength in the dollar against the global forex currencies. Coming to the technical levels, right now in dollar against the rupee, we expect the rate to stabilize around current levels. The first resistance is seen around 55.15, and it is expected that